Welcome to the latest Motley Fool scoreboard. I'm on in Chocolate. We've got longtime fools, Ant Chavone and Matt Argersinger, giving a 1 to 10 rating to the dividend-paying medical device behemoth, Medtronic. Ticker symbol MDT. We'll rate the strength of Medtronic's business, including factors like industry and competition. A 10 is invincible, a 1 is hopeless. Ant's at a 7. Matt, you're at an 8.
That's right, and I'm going with an 8. It's not an invincible business. It has some big competitors like Becton Dickinson, Stryker, but it is the world's largest medical technology company, $130 billion market cap, $3 billion annual R&D budget. It has some of the best and most critical technologies serving some of the biggest markets. You've got cardiovascular, diabetes, surgical, neuroscience. These are all big verticals that really get people when they're older. And as the world's population ages, and according to the WHO, 20% of the world's population is going to be over 60 by 2030. So I think Medtronic's devices are going to be even more critical in the future. The company is in the process of spinning off its diabetes business, which kind of muddies the waters a little bit for investors. But otherwise, I would have scored it higher, but an 8 for Medtronic.
Yeah, I agree with everything Matt said. I only gave Medtronic's business a 7 because this is not like a toll booth-like business. It requires constant reinvestment into research and development to remain competitive. And there's always the risk that you have emerging technologies like GLP-1s or even AI that create better ways to treat these chronic illnesses or even detect them, before Medtronic's devices are needed.
For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Both of you have 6s this time, Matt.
That's right, I'll go with a 6. So CEO Jeffrey Martha, he joined the company in 2011. He became the CEO in 2020. His background makes him highly qualified. Before joining Medtronic, for example, he had leadership positions at GE Healthcare. I like that his incentive compensation is mostly tied to revenue, earnings, free cash flow, and 3-year rolling total shareholder return. But he's very highly paid. $21 million in total compensation this year, $20 million last year. His annual compensation trumps his personal ownership stake in Medtronic, which is around $13 million. And, Medtronic has actually underperformed both the S&P 500 and the broader healthcare sector since he became CEO. I think he's the right guy. I just need to see more time and a better performance of the stock.
Yeah, that was my main concern, just the performance since he became CEO. But I will say, what I do like, and why I do still give a 6 for Jeff Martha, is that he's really investing into new products. So R&D is growing faster than revenue, which I believe that's the first time that's happened in 4 years. So I'd like that focus on product development and particularly organic growth because, growth through acquisition hasn't exactly been too favorable for Medtronic in the past. So I like that they're trying to get better internally and as well as getting smaller by spinning off that diabetes business. So personally, I love when a management team is prioritizing getting better by getting smaller.
For financials, a 10 is a fortress, a 1 is yikes. Both of you agree once more, Matt, with 8s.
That's right. They've had some great results on and solid growth in all 4 of their business segments. They just raised guidance again for both revenue and earnings per share for the full fiscal year 2026. They're on track to generate $5 billion in free cash flow this year. That's really solid. That easily, by the way, covers the dividend, which, by the way, Medtronic has paid and raised a dividend for almost 50 straight years. The only thing that has me slightly concerned is that, in the healthcare space, earnings can be less predictable at times. Ann pointed out earlier some of the potential major headwinds the business could be facing. There's also quite a bit of debt on Medtronic's balance sheet, close to $30 billion. I'd like to see that come down before giving Medtronic a higher score.
Yeah, I also give it an 8 because gross margins for Medtronic are pretty high at around 65% and tend to be high for the whole sector. So that means revenue growth and particularly organic revenue growth is very important. And in their most recent fiscal quarter, management actually raised their full year organic revenue guidance to 5.5% from 5%. That's pretty strong, and that's why I give it an 8.
All right, let's talk valuation here, Ant. How well will Medtronic's stock do over the next 5 years? And how safe is it? Keeping in mind a 10 is a sure thing, a 1 is a lottery ticket.
Yeah, so I'm going to 10 to 15% annualized returns with a safety score of 8. And that's because Medtronic trades at about 17 to 18 times the earnings, which equates to an earnings yield of about 5.5%. And management expects to grow earnings per share in fiscal year 27 at a high single-digit rate. So that comfortably kind of gets you into that double-digit expected return range, kind of before even accounting for potential multiple expansion, which the stock still trades at a discount to its where it is historically traded, looking at the recent past. So I think that adds to the safety score of 8 as well.
I'm also going with 10 to 15% per year. I'm going to put a 7 on that, so slightly lower on the safety side. You're getting a great dividend, 3%. Ant mentioned the multiple. I would also say the healthcare sector as a whole has really underperformed the market over the last few years. I expect the healthcare sector to do better, so that should lift Medtronic as well. I would just say, maybe I'm a little less safe just because of some of the challenges in the healthcare space that we talked about. But otherwise, pretty solid chance at 10 to 15% returns.
Thank you to both Matt and to Ant. They've given Medtronic a strong overall score of 7.3 out of 10. No top-its. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is East Group Properties. Till then, Fool on.
Ant and Michael are like, what are we doing here? People, we got stuff to do here. Get on with this.